Markets are ripping higher today. The Dow is up 250 points, oil prices are collapsing, and investors everywhere are doing what they do best, celebrating first, asking questions later. But here's the problem, and this is critical: beneath all this geopolitical feel-good energy, corporate America is quietly admitting that they can't hit their numbers. Welcome back to TechMeHome, MarketPhase Daily News. Today is Tuesday, May 26, 2026, and this is the story that should terrify you. Let me break down what's actually happening. The headline is simple. US-Iran diplomatic optimism just triggered a classic risk-on rotation. Geopolitical tension eases, investors panic sell bonds and pile into equities, oil gets crushed, and suddenly the energy sector, which has been a punching bag for months, starts looking attractive again. This is textbook market behavior. Lower tail risk equals higher risk appetite. The math is simple, but here's where it gets dangerous. This rally is built on hope, not fundamentals, and hope is the most expensive thing you can buy in a bull market. Underneath all this geopolitical relief, today's earnings data tells a completely different story. Companies are missing expectations, guidance is disappointing, consumers are pulling back, margins are compressing. This isn't a mystery. This is a warning sign that Wall Street is ignoring because the headline is too shiny. Let me explain this like you're 12 years old. Imagine you're running a lemonade stand. Your neighbor just told you he's not going to throw rocks at your stand anymore. So you're dancing and cheering, right? Great. Fewer rocks. But meanwhile, nobody's actually buying your lemonade and you're about to run out of lemons. The neighborhood problem got solved, but your business problem's still broken. That's where we are. Here's the thing. When markets shift like this, your portfolio needs armor. That's why tools like MarketPhase Pro are critical. Real-time earnings tracking, sector rotation alerts, geopolitical risk scoring. You need to know when the headline rally is masking deteriorating fundamentals, because in 2 weeks, when everyone realizes earnings are actually terrible, you don't want to be holding the bag. Protect yourself. Go to MarketPhase.com. Now let's talk about the real casualties. Humana just got crushed because Medicare Advantage rates came in lower than expected. This is massive. Medicare Advantage plans have been the growth engine for health insurers for years. If government reimbursement is tightening, profit margins compress hard and fast. This is a canary in the coal mine moment. Watch for guidance cuts from United Health, from Cigna, from every insurance company in the sector. This could be the start of a full healthcare repricing, and if you're holding health insurance stocks thinking they're defensive plays, think again. Then there's PayPal. Q1 underperformance tied directly to management changes. Leadership transitions create uncertainty. They create vacuum. And in a vacuum, capital flows to safer bets. PayPal is in an inflection period, rebuilding its entire executive team and strategy. That's not a buying opportunity. That's a red flag. When the captain leaves the ship, the crew doesn't usually know where they're going. So what does this mean for you? Here's the reality. Today's rally is real, but it's temporary relief, not a trend. Geopolitical situations reverse quickly. One wrong word from Tehran or Washington, and this entire lower-for-longer oil narrative collapses. Meanwhile, earnings disappointments are piling up. Consumer pullback is accelerating. Margin pressure is intensifying. The smart move right now is not to chase this rally. It's to ask yourself, are my positions built on actual fundamentals, or am I just riding the geopolitical relief wave? Because waves crash, and when they do, it's the unprepared that get hurt. Watch your earnings calendar, monitor sector rotation, and for God's sake, don't mistake a headline for a trend. The Fed's been printing money for years, inflation's still sticky, consumer confidence is wobbly, and now we're finding out corporate earnings are weaker than expected. That's not a bull market recipe. That's a house of cards with a tailwind. Stay sharp. Stay skeptical, and remember, the market rewards patience and punishes complacency. Right now, complacency is winning. Don't let it win your portfolio. None of this is financial advice. This is purely for entertainment purposes. Always do your own research before making any investment decisions. This is TechMeHome, MarketPhase Daily News. I'll see you tomorrow.